time for some overlooked stocks. George Tsilis has movers that you missed in today's session. George, let's start off with the drone company. Sounds pretty cool. Do they make money? Who are they selling the drones to?
Hey, OJ, yeah, so this particular company, Ag Eagle Aerial Systems, it's actually a commercial drone company, and no, they don't make money, at least from what I can see so far.
Stock must be going wild.
But it's going, yeah, so anything that's not making money is going through the roof. It baffles me too, but at the end of the day, there's also a lot of momentum in some of these technology names. Look, drones, we talk about, drones as more of a consumer application. If you're a YouTuber and you want to show some high flying activities, you use a drone, or, maybe you're using it for fun with your family, but there is a commercial application. There's also a military application for drone and drone technologies. And in this particular company, which is really more of it's a drone imagery, if you will, a UAV, unmanned aerial vehicle drone. It also provides data analytics. Now, the target markets are actually interesting for this company. It's in the commercial space. The target markets right now are the commercial agricultural space. And so, one of the things that's going on is a lot of the marijuana stocks, they're doing extremely well. And if you think about what's going on with regulatory elements behind marijuana, as more and more marijuana gets legalized in multiple states, there's going to be regulation. And if you think about the regulations, anybody who's growing hemp or marijuana is going to be, of course, overseen by some sort of coordinated local government. And this is a technology that can help manage the coordinated efforts between the marijuana industry as well as local governments. But at the same time, if you think about drone technologies moving forward, it's probably safe to say that in the next 5 or 6 years or so, we're probably going to see DoorDash delivered to your door, not from the car or walking up to your door, but through drones, packages, FedEx, UPS, but also Amazon. There is some speculation that Ag Eagle is looking to unify some sort of partnership with Amazon. Interesting company, interesting industry group, because right now the drone technologies from the commercial standpoint aren't readily or heavily applied yet, but it's expected over the next 5 years until 2025, we're looking at about a compound annual growth rate from the industry, about 56%. We're close to about $130 billion in the next 5 years for this industry. Okay.
George, so this is about what they're going to do eventually, not what they're doing right now, right? George, it seems like there's a commercial side of this. What about like the government as a client? Isn't that a big deal for drone companies usually?
It is. I mean, look, from government spending, there has been a decline. There's no doubt. But I think the other element behind this company, Ag Eagle, OJ, is we talk about Raven. Raven is another one of these industrial companies that's really focusing on technologies in the agricultural space. I mean, there really is a theme going on right now about not just, agriculture, but sustainable agriculture. We talk about sustainable energy. Sustainable agriculture is also an undertone or a theme within this marketplace. And so there are also other things to think about here with this company. E-commerce themes, that's hot right now. If you think about marijuana and agricultural growing in the marijuana space, that's hot right now. If you think about sustainability elements behind a lot of stocks right now, that's also hot right now. And the other thing is, again, the e-commerce side of the equation. I think that's also a very big, growth opportunity for this company. And the other thing is, looking at this industry group, it's hard for me to find, at least I haven't yet because I didn't have enough time to look at it too deeply, but it's the only publicly traded company that I see that's specifically focused on aerial UAVs outside of other companies that are traded on the OTC markets.
Okay, so there's also a little recreational element to some extent, and the farming side I think is pretty interesting too, George, the utility of drones and some of these agricultural markets that might also be picking up some momentum. George, let's keep going here. All right, I do like this story, George. I love it when we find companies that don't make a darn penny, and the stocks are up. Let's see, from $2 to $16. Is that just this year alone? No, okay, from about $17, so up 230% year to date. And then going back further than that, I mean, it was about 1 year ago, the stock was trading at 19 cents, which would be obviously a mind-boggling percentage, like 5,000 since then. So it's got some living up to do, George, even though it's in some of these potentially major big growth areas, right? I mean,
right.
This is the type of stuff where you got to buckle up and be ready for a crazy ride.
Yeah, I mean, if you look at its sales last year, I mean, they had sales about $1.4 million, and right now it's trading at a multiple from a price of sales, OJ, over 300. So, I think it's good that you bring this up, and we always have to address these things because there are risks involved in a company like this. There's always going to be secondary share issuance risk, which again, if you look at the company, which is also remarkable, right now there seems to be just recurring supply of companies, stock. When the stock prices rise, they issue secondaries and they buy. I mean, this company issued about 20% of the float in terms of a mixed shelf offering, $200 million not too long ago. And the company stock just continues to go higher. So there seems to be a little bit more, obviously hype, speculative froth associated with anything with emerging technologies. But there is something here. I just wouldn't dare to say that this is a fair value for a company like this,
Sure.
But I could be wrong because right now, with the interest rates so low, they're paying up for growth. And you got to think about growth companies. Growth companies won't be profitable in the far future, but they're paying a huge price for a very low discount value or discount rate today.
Okay. Hey, George, next stock, TYL. This one we've discussed before, Tyler Technologies. This is the software provider for municipal governments, right?
It is. Yeah, basically, this is an interesting company. It really focuses on software solutions for cities and local and municipalities, school districts, and particularly court systems. They have two primary software divisions, which includes enterprise resource planning for municipals as well as court management systems. But there's also other sort of bolt-on software products like tax assessment. And of course, right now, if you think about COVID, I got a couple of teens in school, the school districts are really a mess. And they don't really have resource and coordination planning, even, almost a year after COVID really started, OJ. So I think this is another area of interest for a company like Tyler Technologies. Now, the stock went higher today, despite the fact they reported earnings where they actually demonstrated declining sales relative to estimates, also on earnings, but they announced an acquisition of a company called NIC Incorporated, which now bolts on essentially online payment solutions for processing federal, state, and local taxes and fees. So this is really a tale of a company that is certainly struggling. They missed the revenue, they missed EPS. It was down 22% year over year in terms of, 2% year over year in terms of sales. And that's because state and local governments have really, come back in terms of spending or cut back spending. But when to see Tyler Technologies as well as the acquired company NIC both go higher, that gives you an idea there's something there in terms of economic value between the two combined units. And this is really a company that's it's really a free cash flow machine, because if you look at its trailing 12-month sales, about $1 billion plus, they generated just last quarter about $165 million in free cash. So it's a free cash flow machine. They probably use a lot of that cash to make this acquisition, and it obviously is very accretive to both companies because the stock price for both went higher despite the fact that this company, Tyler, missed sales and earnings estimates. So,
George, in some way, this could be a company that does benefit from a degree of return to normal, or maybe more specifically, the next round of fiscal support if money makes its way into the hands of local politicians who then can spend it on these services that Tyler provides.
Yeah, absolutely. You got to think about that element. Also think about the element of tax assessment. I think the states, because they don't have the printing press like the federal government, they really have to make sure people are paying taxes. I think that's going to be a big focal point for all states and local governments in this next coming year, because they really found themselves in some fiscal dire straits because of COVID. But at the same time, the federal government is probably planning some allocation of that huge $1.9 trillion plus stimulus package, which is due to be passed for state and local governments. And I think also school districts, just from personal experience, they really need some coordinated effort from a software standpoint, because it's still really fragmented and there's a lot of unknowns when dealing with scheduling coordination with the schools. And I think that's another element that'll help Tyler. But you bolt on the payment processing, that's the acquisition, and it makes a lot of sense.
Yeah. All right. So two ones to watch here. Nick, a.k.a. eGov, and Tyler, TYL. Good stuff, George. You got one more for us, and this one has earnings. Trupanion Pet Insurance. It ain't cheap, but it works if something goes wrong, with your fuzzball, George. So the stock is down a little bit. I mean, it doesn't really trade in the aftermarket, but the print that they do have is lower from where we closed, and there is a bottom line miss. They lost 9 cents versus 3 cents estimated, but the revenue came ahead of expectations. Do you think this will be a big deal for the company tomorrow, George?
Well, I think it is. I mean, it might be. I mean, after hours, you're probably going to see some selling. Last I looked, it was down marginally because it looks like they missed on the earnings front. At least they made it up on revenue, though. They increased their revenue to about 142 million, beat the estimate, which was 139. That was about 35% year-over-year growth. But it's to be expected when it comes down to this company, Trupanion. For those who don't know what you're referring to, OJ, it's basically a specialty insurance company for pets, focused more so on dogs and cats.
Right.
This is a huge market right now. I think COVID has created lots of problems, and there's also some demographic problems going on. I mean, home prices are through the roof. New household formation is not growing. You got to think about the nature of demographics. Population growth is declining in terms of the rate of change. And so people are buying pets, there's no doubt. And this is, again, an insurance company that's essentially captivating or capturing large market share, and it's really accelerated relative to traditional insurance companies like United Healthcare, as well as even property and casualty insurance like Allstate. But it is a growth company. You got to keep that in mind. And you said it's expensive. I believe you, but I suggest, OJ, as well, that they could probably charge a little bit more, and they probably should, because going forward, I did notice their gross margins are very, very low at around 15%. So that gives me an idea that two things will happen. Either one, they'll be jacking up the prices, so watch out. Or two, they'll increase their revenue base large enough to be able to increase their sales with a lower unit cost. And that might be what we see as a reaction open tomorrow with Trupanion, despite the fact that they missed on earnings.
Well, it sounds like, George, they've got a little bit of a project ahead of them, which is going to be either to spend to acquire more customers through sales, advertising, and marketing, or they're going to need to jack up the price. I believe I use Trupanion, actually. Maybe I'm not supposed to disclose that. There's not a lot of options out there, George. But with all the pets that have now come into ownership and the huge boom that we've seen, the stock has run similar to basically Chewy. But it seems like your take is that perhaps, by the way, actually the chart looks exactly like Chewy, to be clear, that maybe there still is something left to be desired here about making it down to the bottom line. So insurance perhaps not as obvious to every pet owner as food is. We'll see, though. I think this will be an interesting one to watch tomorrow to see if the market has a problem with their loss. Obviously, this is a really big period for pet ownership, and thus you would think insurance. If they're not able to make it work right now, perhaps investors might get cold feet. We'll find out tomorrow as we look at this stock, but definitely an interesting one to watch here. I miss having my cat when we did the show from home. I could bring him up right now. But you'll just have to imagine him. Thanks, George, for the overlook stocks. Really good deep dives today into some of the missed movers of today's session.